Good afternoon, everybody. How are you all doing? New Year's today. Wishing everyone a fucking prosperous 2020, yeah? Want to do a video, as I said before, for where we're at, where we're going. Oh, arsehole. Alright, anyway, before we do that, though, I wanted to run through a couple things. What, especially with orders. The calls that come through, where people are probably shooting themselves in the foot, yeah? And this happens. I did it when I first started. If we got some like the new people that have just started putting orders in, very very common just to fucking buy in and wondering what's happening, why is it going down, why isn't it going up, type of thing. Yeah, putting orders in is probably one of the most critical things about doing this. Yeah, it's the one thing you need to be the most careful with, and make sure you do right, because that's what'll stop you losing money and making money at the same time. What people usually do without any experience is, especially with signals, yeah, they'll get a signal. What was the signal we got? Buy between 7170 and 7350. Like, we're in the midpoint of that, yeah. We're still, maybe not the middle, but we're close to the middle of that. We're not too far away from reaching all the entry targets, which is realistically something you want, not something you want to be afraid of. But I have a feeling a lot of people are just market ordering in at the top of that entry price and then watching it go down and freaking out. You need to be pretty careful with that, yeah, because what happens, or what people do is, well, internet's frozen on this, so it's not going to show, but you'll get the call come in, buy between 7170 and 7350, and they'll buy at about 73 there, wherever, and it'll drop down $100, and like, what the fuck? What's going on? That's pretty standard though, yeah. Like, that's pretty standard. So you just need to make sure you're setting your orders up right, so you're not shooting yourself in the foot. In terms of the percentages, I've put it up a couple times, and it's in my videos of how to put the order in so you hit entry targets. Now, cons and pros of that. The first con, obviously, is it doesn't always hit all entry targets, so your position size isn't always going to be the largest. But at the same time, the pro of that is you're not just... Oh, my fucking cat just sneezed on me. Are you serious? Fucking cat. Anyway, the pro of that is you're not just putting everything in at the high price, which is what some people are doing. Like, they'll get the call for 7350, and it's at 7350, and they think, well, that's the time I'm supposed to buy. Come on, guys. Like, it's all right. I mean, fuck, people make mistakes and people learn, and that's what happens. Yeah, but that's why I say make sure you know what you're doing before you do it, because the last thing you want to do is keep buying at the high price. And this is what people do. They buy at the high price, watch it go down, they panic, they close their position, right? They go, fuck, I've got to get out. They take a loss, and then they watch it go back up again, like I would have done here, and they go, I've got to get back in. And like one lad, who's a good guy, just well, as new as me, but still, I guess doesn't do it as much. After closing his position, rebought at the first take profit target, and then watching it go back down again. And what do you think he wants to do again? All right, close his position at a loss, and you can keep doing that and chasing your tail. And you're just going to clean your account out. Yeah. So what you do, don't press market order. Right? The only reason you need to market order ever is if you've got a big fucking candle that's going through the roof and you get told you got to get in this now. But that's so rare. That's so rare to do, yeah? And we don't chase those things either. That's not what we do. Oh my god. I just got a message about something, doesn't matter. So you want to put limit orders, right? And that entry target. So your limit order. You put the price you want to enter it. Now again, how do you pick the price? The entry zones is 7170, 7350, whatever it was. The percentages that I sent to you are not the entry points. That's the percentage of the position you want to put into the entry target. And you just divide them by 4 or 5, whatever you feel comfortable with. Yeah, I've put my entry strategy in, but really make your own. It's not that big of a deal, right? All you want to do is you don't want to be putting everything at the highest entry point. That's fucking silly. That's really silly. Don't do that anymore. If it calls comes for 7350 and it's at 7340, don't just 100% buy in, right? It's gonna go down. That's why there's an entry zone. It's like most of the calls I put in aren't even my own calls. They're calls from other people I pay money to get. And I've filtered you. I've shown you. There's about 60 channels that I've showed you. I only use about 2 or 3 of them because the rest of them are shit. The reason they put entry zones in isn't to try and cover their ass or something like that, so they can look good if it goes down and go, oh, it's okay. They put that in for a reason. It's all based on levels. And they're the levels that say it's supposed to be at. Now, the reason they have the entry targets is because no one can predict to the dollar where it's going to go. There's a zone. So you put your targets in to enter within that zone, within certain levels that I've gone through and showed. So let's say the 7,350 to 7,170. Right, so 7,350 is the price you want to enter at. Remember, don't use this scale unless you're going in all in, because that'll give you the percentage you're going to use out of your whole balance. You've got to work it out. But let's say you have $1,000, you've got, and you want to risk 20%, 10%, whatever. So you got $100 you want to put on it, and you want to put entry zones in. You divide that by 4. It's obviously $25 per entry, right? So you just divide it by 4. You have the top. So let's say you want to go 7,340 or 7,350, whatever the BTC amount is. That's fucking $25, whatever, right? Buy. It'll come up here in your order history, your open orders that you have as a limit order. And you leave that price. You do the same thing. Let's go. You want to go 7,250. And the same thing, and 7,150. And you put the orders in. It'll come up in your open orders. Now, once those orders are filled, it'll come up in a position. Once all the limit orders are filled, you won't have 3 different positions. It'll have one position for you, and your profit will be based on that. Now, some people don't like that. I think it's a lot easier. Yeah, it's a lot less complicated rather than watching 4 different fucking orders at the same time. But once all your limits are filled, remember, when you put your limit orders in, set your alerts to alert you when it's hit that price. You'll see your position. Once your position comes in, set your stops, etc. You can set your stops beforehand, but just do it once the position's in. Otherwise, it's just a waste of an order and it takes up your capital because it'll put there as a side as an order. You put your stops in and you take profit targets in. And the same process for you take profit targets. Put in the price, right? I want to put 7,450 as my first target. How much do I want to order? How much do I want to take at that price? Whatever you want to take as your first take profit target. New guys are set lower take profit targets just so they get their head around how to do this. You don't have 6 take profit targets and you're wondering where what percentage is, putting everything in your journal, trying to figure it out, right? So we've had 2 take profit targets hit already. Now remember, swing trades are longer time frame, especially if we like scalping calls. Everyone that's new likes scalping calls because it's quick. And you think it's an easy way to print quick money. But the risk-reward ratio isn't as high, yeah? They're not as good as your swing trades. The swing trades are more profitable. The most profitable trades are the swing trades because you've got larger targets. It's like I don't think we're going to hit 8,000 at the moment, which I'll show you something soon, which is why I think that. But at the same time, like, you've got to set your targets at certain levels, especially if they're larger targets, yeah? Like scalping calls is quick go, yep, all good. Swing trades take a longer time. You sit there wondering, why isn't it happening? Why isn't it happening? If you've done this right, which if I told you, good. If not, it's all good. Don't worry, right? But you would have already taken some profit and you only have half your position left, and you wouldn't be freaking out because you're just at the entry point for that target. You're back to square one. It's all good. Just like I said, now I've put this up before, so again, I probably should have said, every time, make sure you do this, make sure you do that. But guys, it's in the videos, it's in my calls. I send plenty of information so you know what to do, yeah? You've just got to be diligent with this, and don't get that fear of missing out. Like, you've got to get in, especially on a longer term call. On a scalping call, I mean, more likely you probably just jump in at a quicker entry price, right? But for a swing trade, like, it takes a bit of time. I mean, don't be greedy and think, well, I want it all to happen in one day. It's not going to fucking happen. You're going to be stuck getting those scalping calls, which, if it says we reach 80% profit, it's only on the entry, not your position size, not your balance size, yeah. So really, if you put in 5% of your whole balance and you get 100% profit, you're not getting 100% profit on the whole thing. You're getting 100% profit on 5%, so you made 5% increase, which is why swing trades are better. But it takes a bit more time, a bit more patience to relax. Put in your entry prices right, put in your take profit targets right, and your stop limits right, and you'll be fine. And if it stops, fuck it stops. Like, this is a year-long thing. Yeah, you don't want to look at this and go, well, how much profit am I going to make this one call, right? No, every month, if you fill your journal out right, which is why I keep saying your journal is most important. If you fill your journal out right, you look back every month and go, well, how much did I make this month? How much did I make this month? And you let that compound, and eventually you'll start building a balance where you'll understand that it's not about instant quick returns. It's about building something over a longer time frame where you can fucking retire and relax. I don't have to go to work over and over again, yeah? But anyway, so if you still don't understand it, go back, watch the videos again. Go back through the information I sent you. I said it especially in the videos, that putting orders in is very important. It's not something you just skim over and go, well, fuck it, it's very important, otherwise you're going to break. And I said that in the videos as well. Everyone teaches you technical analysis and how to use indicators and blah, 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 but they don't make any calls. They don't show you what to do. And I said that it's very important you pay attention to that part, because how you put your orders in will set you up whether you're going to make money or lose it. And if you're just buying in market order at the top price, panicking, closing at a loss when it goes down a little bit, watching it go up, buying in again, and then watching it go down and closing again, that's 2 times you've lost money when really you should have made it, just from how you're putting your orders in, yeah? So go back and read it again, go back and watch it again if you're unsure, yeah? Or ask. And when I send things like percentages for entry targets, like it's not something you go, oh, well, fuck, doesn't apply to me. Like, it's something you need to learn. But anyway, and for the new guys, like, if I say buy at this level until you figure it out, like, figure it out, right? Don't just go, all right, well, he'll wait for me to tell me what to do next. Like, still, I mean, be diligent. If I say, until you learn how to really put orders in properly, I've given you all the information to do it. I mean, I can't do the orders for you. I'll give you the signals, I'll give you everything. You've got to still work on it, yeah? All good. But I think everyone's doing pretty good. Everyone's still pretty happy and having a bit of fun, which at the end of the day is what it's about, yeah? Making some money, having some fun, learning something new. But where I think we're going. So, new indicator that I've come across, it's been out just recently. All credit to list that, Philip Swift, a positive crypto. This is good. I'm going to put this up so everyone can learn about it and have a read through. A couple important points I want to point out. These, yeah? As it continues its progress on its adoption journey, blah, blah, blah. Rather than this Bitcoin price action behaving like a traditional stock market share price, we see it act more like a technology being adopted at an exponential rate. Because Bitcoin is a network being adopted by society, because it is decentralized money with limited supply, its price is a direct representation of that adoption process, which is why you see a direct correlation between the price rise and the popularity of it, or the amount of hype around it. Countries are starting to get involved. Before it was, the average kid trying to jump on something new. Now there's nations adopting it as a proper currency. Banks are starting to trade it now, which goes against what it is, but everyone's starting to take it on. So you do see a still steady climb. Go up or down, but it's one of the best investments you can make at the moment. Gold was up 30% at the end of the year. Bitcoin's up 100. Oil's the same. Bitcoin's up 100. Nowhere near that. So regardless of what you think, this is still growing. And we're still in early days. So it's good to see people like this lad and crypto people trying to get involved, trying to figure it out. Early days are good for adoption. So if you just got in, don't worry about it. You're still at a good time. Whether we've had all-time highs or whatever, there's a lot of hype about 100,000 and stuff like that. Don't listen to any of that shit, yeah? Don't listen to any of that. We're nowhere near that yet. I think we're going to go down a little bit further because of this. But anyway, so here we have this golden ratio multiplier. What it is, read through it. We'll go through it. But it's a 350-day moving average. This line is a moving average by 350 days. Now, it's a very specific fucking number. It's not 1 year. It's not 6 months or 9 months. 350. Why have they used that? Well, like anything, you've got to find the coincidences of support and resistances. Here, every time there's been a cross where the price has pushed up past this 350-day moving average, you get a run of that cycle. So it's crossed here back in 2011. You got the first bull market run we had. Massive. Now, with this chart as well, it's scaled. So there's 10 cents, $1, $10, 100, 1,000, 10,000. So it's obviously times 10. So the price between 10 cents isn't the same price between 10 cents and $1 isn't the same between $1,000 and $10,000. Which is one criticism I have of this, because it's not, the information isn't displayed as good as you want it to be. It's on a scale, but it does show the trends, right? So you have that first bull market run. Going to push through. That's a support line. It's broken through that and it's gone back down. That's a bit of a crash. You're looking at percentage-wise, it's like a 50% drop. trying to push through that resistance again. When it did, next bull run. Break through that support, back down to bear market. Push through again, you have that next bull run. Now, have a look at the time frames as well. These are years. Right? That's nothing to freak out about. That's a good thing. You want people take analysis, they do it off 2 short time frames. They're doing it off, hourly charts, 4-hourly charts. That's not enough to pick trends, yeah? Weekly charts and daily charts at a minimum. This guy's doing off years. That's fucking good. I think this is a weekly chart, but this is the type of analysis you want. This is how you pick the trends, and you find the trends. So you got the strange coincidence with the 350-day moving average. Now, we know about the golden ratio and the Fibonacci numbers. If you want, you can go through here again. It'll give you some more info on the golden ratio Fibonacci sequence, but I think we know enough about it. If you don't, this isn't a time, again, if you don't, click on it and read through it. So building the cyclical layers, how do you find the cycles? Well, the first thing you do is you take the 350-day moving average, multiply it by the golden ratio, 1.6. Here you'll find a strange coincidence with supports and resistances. So it broke through, where's it go to? Resistance. Breaks through that resistance, what does it become? Support. Support. There you have the market top of that cycle before it goes back down. Breaks through that level, pushing up again as resistance. That's the bear cycle. Pushes through that support, what happens? Back to a bear run. Support, broke through, that becomes support. Support, support, support. Broke through that, back to a bear run. Resistance, broke through, where's it go to? Resistance, that becomes resistance, resistance. Trying to break through, push back down, resistance, push through, breaks through, support, right? Good coincidences. It gets really odd. I mean, it's more of a blown up chart, so you can look at it to the dollar, see that it's legit. When you start putting more Fibonacci numbers in, so here you have the 2, the 350-day moving average times 2. Support, and support when it breaks through. So things become more interesting when we start to multiply, blah blah blah. Change those values, so multiply the 350-day moving average, which is shown in the chart below, by 2. Again, the arrows highlight examples of where we see it act as a major level of support and resistance through Bitcoin's history. As a trader, investor, blah blah blah. Good for take profit targets. The next number in the Fibonacci, we'll read through. So the take profit targets. So if you took profit there, it's alright, push through, take profit, push through. Again, it's more acting like another support before the next level. So although it's alright, I mean, we don't want to run off the 3. It's not that much of a deal. It's just another level. Alright. As you add more levels, you get more support levels. You can see pushing through tops and bottoms. But when you start to put... No, not there. Where is it? Here we go. So the 350-day moving average times 2 is the first Fibonacci number, not 1, because obviously 1's the same. This green line here is the 111-day moving average. I don't know why 111, that's just what he's found works as coincidences. It happens over and over and over again, so you run with it, right? But here you have the 350 DMA times 2 acting as that level of support, the green arrow being the 111-day moving average. Now when you get across on this, it predicts the market tops. So there's the market top there, the first 2013 bull run. Within 3 days. The same thing, push through, going through, back to bear, push through again for a bull run. When it across again, market top within 3 days. So 2 market tops. Now these aren't market tops, these are peaks, but a market top, like the all-time high for that period. Again, cross through, market top. Good to know. Anyway, let's look at the chart. Now this isn't BTC USD. If you want to find, you can look at BTC, but at the same time, if you do that, you'll only get a mature enough indicator or reliable data up to, I think it's August 2018. So it'll end about here. All right, that's not enough data to really figure out what's going on. If you take this, right, you look at the same levels. What's going on? Why aren't you moving? Fucking slow. Alright, here we are here. Come on, computer. here we are at this level. Alright. Let's get rid of this. Alright, so that's a 350-day moving average, the baseline, right? You can see where we're struggling right here. Right, you can see the levels. Now every time we've pushed through, where does it go to? The next level. Push through, next level. Bouncing around, down to the next level, down to the next level. Now why would this be acting as support and resistance? Now you know the coincidence with the Fibonacci numbers. And a lot of that, without a doubt, has to do with that herd mentality, where if everyone's using that same indicator, everyone's using those same levels, everyone be setting the same take profit targets or the stops at the same levels, 100%. I mean, there is cause for coincidence, don't get me wrong, but when you have that herd mentality and you have a bunch of traders running off technical analysis, and they're all putting their targets at the same levels, it's bound to hit there, yeah? So there's a lot of debate whether it's due to the spooky nature of who we are, mentally and psychologically, or that's just where everyone's setting their levels at. But it's something relatively new, where the Fibonacci numbers run off moving averages. That's something different. And that does cause some more spooky effect, I think, right? And the accuracy of it is pretty fucking accurate. Like, that's what's sort of thrown me out a little bit now. So I know, like, again, that's probably emotional trading as well, but at the same time, what do the charts say? Right, every time we push through this level, we've bounced up. If you backtrack, this was our level. Going up and down, we pushed through, that became resistance, and a very strong resistance. And where did it go down to? Support, right? And we didn't quite get to that next level until we broke through. Now that's a bit of a jump still as well. I mean, that's a $4,000 difference. So there is reason to say, well, fuck, how big of a gap is it? But like, to the dollar, it predicts when we push through and go to the next before an actual run. Like, this is just a long continuation of that same consolidating trend, right? When does it change? When we push through, and then we have a bull run or a bear run. Also, strange coincidences when this 111-day moving average pushes through the 350 DMA. Right, that's when we have a little retest before we go down. The same thing between the times too, right? That's a cross. Start of the next run. Start of the next run for the bull run, right? Going through. So we have some coincidences between. You can go through back fucking forever. So to find this indicator, first change it to BLX. You can't go through BTC USDT because it won't give you enough reliable data. But BLX, which is Brave New Coin Liquidity Index, price is still the same, but it'll give you much more data. Only thing is you can't go off the price line because it changes all the time. And it doesn't update the same time as BTC does. So now it says 7218. I mean, it's 7216 in XBT, but it'll change over and over again. That'll rise and that'll stay the same. So don't worry about that when you're doing that price bid. But anyway, through the whole time, same coincidences. Last time we had that cross was before we had that bear run, before we had that massive downtrend, right? Look at that massive downtrend. You pick that, especially when it's giving you the market tops, right, saying it's going up and then pushes down through that downtrend. I mean, profitable, right? But these are long terms. These are long terms. We're not making year-long trades. But watch, take yourself out and look at the bigger picture and try to find the trend. Where are we going? We had that run up again. We push through that support level, right? Push through it. Market top. Or close to it, yeah? We didn't quite break through. We continued that same downtrend. Now remember, every time we've had this cross, we've had a run, right? Every time we've had a cross. When we cross down, we've gone down. When we crossed up, we've gone up. This is where we're at. It's broken that support level of the 350 DMA. Bit of a warning sign, yeah? Let's see if we make me a bit more nervous. These are about to cross again. Down. So unless we have some real good price action soon, but even still, it's bound to hit again. It's almost bound to hit. When it does, just based on past performance, and again, you can't always look at past performance as the most reliable indicator of the future, but fuck, the coincidences are there, yeah? Every single time it's happened, it's gone this way. So it looks like when they're going to cross, we're going to go back down again. Where, who knows? I mean, there's a lot of call for, I don't think 3,000, but I've been saying 6.5 for a while. That's not too far off where we are. That wouldn't be too steep of a jump down from where we are. And again, if it goes down, fantastic. It's not a bad thing. We want it to go up or down. We just don't want this shit. Consolidation. We don't want a market like this. Right? You want this shit. You just want to be prepared for it either way. Now we've caught most of this trend down. Where we're going to go next, yeah? It looks like it's still continuing down, but we've pushed through this critical support level. We've tried to break it and been rejected. Try to break it, being rejected. It's found support and broken through it again. Now it's resistance. So I still think we're going to push up to 7.5 because look, it's back on that level, yeah? We're going to retest it again. That's what I think. We're going to retest it again before it decides what we're going to do. So don't freak out. Thinking, oh, what are we doing? We're still in the entry zone for our fucking position, right? It's not like we're stopped out or we're too far down. We're still in the entry for the long. So don't freak. I think we're going to retest this level again, and we have to look. Now, one thing that's also making me think, you look at every January so far. Where are we? January, down. January, went down. Right, look where the lines are crossing. Right, I'll zoom out a bit so you can see. Come on, Lappy. It's slow in my backyard. January went down. January went down. And January went down there too, but fuck, too hard to see. But have a look through. Every January there's been a dump. Now, at the same time, usually every December there's been a fucking climb. We didn't get that this year. Every December there's usually a good push up before that dump. December, a good push up before we dump in January, right? It's like a pump and dump, December and January. Why? Again, I think because every December is a trader's market. The public aren't interested. They're doing their own thing, right? December's just technical analysis, just a trader's market. Now, people say there's been no trend, but there's been a fucking big downtrend. This December's been down, pushed down, right? And if you're thinking about how much, it's still from, 9,000 down to 6.5. That's 30% difference. That's a fucking trend. So there's still been momentum, but not like other years. So I'm iffy on whether this January is going to be a pump. But based on the past, it always has been. And we're coming up to a pretty critical point with this odd coincidence of the 350 DMA acting as good reliable support resistance levels, about to have a cross with this 111-day moving average. So, to sum it up, stop freaking out about your fucking positions, right? Enter them in properly and you won't have cause for concern, yeah? Don't worry about it right now. We're still in the entry zone. If it stops, it stops. Big deal, right? There's hundreds and more to make throughout the next year. But at the same time, nothing to be concerned about. I still think we're going to test that 7.5. So I've told everyone to set your take profit targets at 7.4 and 7.5. I don't think we're going to go to 8,000. I don't think we're pushing that level anymore. We've broken through this support, and it's a pretty critical support level. And we're looking at fucking January. If these lines cross again, we'll most likely go back down. Where? By I don't think there. Maybe over a longer term, maybe, but I can't see it going back down to 3,000 just yet. But anyway, have a look through this chart, through this indicator. Very fucking accurate, and it's got me thinking which way we're going to go. So again, keep the longs open, 7 to 7.5. Stop panicking. Start doing your orders properly. The questions you're asking, don't stop asking the question. Otherwise, I don't know. It's not a bad thing that you're asking me these things one to freak out. Otherwise, you're going to keep doing the same shit. But the biggest thing is stop panicking through your orders. Don't just set any sort of orders and go, what's going on? Set them smart, the way I show you how to do them, yeah? And just watch out for January. So once these orders are filled, just get out of it. And don't re-enter another long until it's legit, yeah? But I think we're going to go down. All good. Thank you, guys. Happy New Year, yeah?